I'm Lisa Ginsburg, and I'll be moderating the session today. We do have Sherry Pace from the Bucks County Housing Group who will be speaking with us. But before she begins, we do have David Sulak, who's the Managing Director of Current Environmental. He's one of our affiliate members, and he's going to be providing us some valuable and helpful information. So I'm going to tell David, if you could come back on screen, I'm going to pull up your PowerPoint, okay?
Okay, very good. Hold on.
Let's make sure. Can everybody see that? Okay.
Got it.
Okay.
Yes.
All right, you guys got me?
Yes, you're good.
Awesome. All right. I'm actually pretty boring. I've been doing environmental consulting for about 28 years.
Oh, excuse me. Sorry, David, if everybody could mute themselves, please. That would be very helpful. And feel free to put yourself on screen as well. We'd love to see your faces. It does make it easier for the presenters to see people. But all right, thanks. Sorry, David. Just wanted to make sure I could hear you.
I'm boring, but I do know what I talk about. Not according to my wife, but regarding environmental matters, I do. So I'm just going to give you a couple quick tips and some little background on some environmental. So we'll scroll through this. Let me tell you something. We live in an area where it's been developed for years. Oil heat was incredibly popular until the 1970s because you couldn't get natural gas. Natural gas was really expensive, but the oil embargo and the deregulation of natural gas in the 70s opened up gas to people. So, I mean, if you're in Bucks County, you're going to have older areas, Langhorne, Yardley, and such, Levittown, where they are on oil heat, and oil tanks have a liability to them. And the Clean Streams Act in Pennsylvania basically says if you own contamination, it's your contamination, even if you didn't cause it. Let's just pop to the next screen. Part of the due diligence about buying a property, besides doing a home inspection, people do tank sweeps, okay? They don't have to do it. People should be aware that it's out there. If they choose not to do it, so be it. But this tank right here, that tank is from the 1990s, and the house is from 1960. They replaced the tank because there was an underground tank there. So if you see an older home that has like a newer tank, it means they replaced it. And in my world, no one spends money for the sake of spending money. So they probably had an issue with the other tank, and it could still be there. And let me tell you, this is true in New Jersey, Delaware, and Pennsylvania. Very common. Let's flip. The next slide. The best way you're going to find a tank is using radar. That little card on the side looks like a lawnmower. It sends a radar signal on the ground. It's like sonar. It can't penetrate a tank. And what you see on the left-hand side is an image. That's what an oil tank would look like. Metal detectors aren't as effective because it's not the only metal on the property. Most tanks are next to a house. And what happens is they'll pick up magnetic signature from the pipes, from the house itself, from rebar in the concrete, from fencing and such, parked cars. It's an issue. Radar doesn't really have that discrepancy. It's a little more discriminatory. Next slide. The reason I say that is what you see in the left-hand side, that yellow stick, it's a metal detector. It's around $800. It was actually made to find survey markers on properties because they're very close to the surface, and it's typically in a known location. Someone said that was an oil tank, and they actually spray painted it. Okay, turns out it wasn't an oil tank. If you go to the next slide, it was just a bunch of metal debris. That's what we dug up. So the fact of the matter is that little bit of metal gave off a signature that they actually said it was close to 5 feet long and 3 foot in diameter, which it really wasn't. On commercial properties, no one uses metal detectors. They use radar. You can find a metal detector cost around $200. Some home inspectors do it. I'm not a big fan. GPR surveys on properties are typically around $400, so it is more expensive, but it's a bit more thorough. We do them, so do a lot of other people. I just highly recommend it on a property where you don't know if it was always been on natural gas. Next slide. And I'll say something else. During COVID, we were doing those things nonstop. All right. I just point this out because when you have concrete, a lot of times you have wire mesh or rebar in it, which will screw up a metal detector, but it's not going to screw up a radar unit. Next slide.
And David, we're just getting toward the end. So
I understand. Let me just real quick regarding mold. There's no regulations on mold in Pennsylvania. There's only 11 states. So if you hire someone dealing with mold, you need to ask them about their experience level, because a lot of people jumped into it and there's no regulation regarding it. Next one. People test mold all the time. It really doesn't matter. If people agree that it's mold, you want to find the cause and then to remediate it. The EPA actually doesn't recommend doing mold testing. Next slide. When people test, you're supposed to test an area that looks stained, because actually this area looks like mold. It actually wasn't. So if you really want to verify something, you can test. The tests are like $40, $50, pretty inexpensive. Next one. That's just, keep going. That's just what it looks like. You're basically taking a piece of tape on the surface. You can also air sample, which is basically, if you go to that, go to the next slide, looks like a little shot glass, and that gets analyzed and look at it for mold spores. Those are two different ways that people test for it, but there are no standards either. So if someone tests, it's either is there mold or is there not, and what concentration would trigger remediation. Next question. There you go. Real quick. We did tank scans all through COVID. Mold was really quiet because people weren't doing inspections, and it kicked in really, I'm going to say in the spring, that people stopped. They started doing more inspections on properties. Hopefully the market goes back to a normalcy.
All right. Well, thank you so much, David. And David's information and David's talk will also be part of what we're going to be sending to all members after this event. The entire program will be recorded. Again, just a couple housekeeping announcements. Please keep yourself on mute. Open your screen. We'd love to see you. I know some of you have, some of you don't have cameras, whatever makes you comfortable. If you do have questions for Sherry during the program, please put them in the chat, and please make sure it says to everyone when you put it in the chat. And Sherry will be stopping during the program a few times, and we'll be reading out the questions to her. And it's my pleasure now to introduce our speaker today, Sherry Pace. She's the Housing Counseling Program Manager, providing pre-purchase housing counseling through webinars, workshops, and face-to-face counseling. She joined the Bucks County Housing Group in 1999 as a full-time pre-purchase counselor. She has numerous certifications, too many to even go through, Sherry. But she's also a U.S. Department of Housing and Urban Development certified housing counselor and a Pennsylvania Housing Finance Agency housing counseling specialist. So we're thrilled to have you today. Thanks, Sherry. I'm going to mute myself now.
Thank you so much for inviting me. I'm thrilled to be here as well. And you're right, there are way too many certifications. But one of them is not in technology, so bear with me while we try to share the screen here and make sure that you guys are seeing what you're supposed to see. All right, there's that one.
Yes, we can see it. Okay, great.
All right, and for me, I want to see my presenter one. All right, I think I did it. Woohoo! So once again, thanks so much for inviting me. Before I start, I was asked to do a plug for the Bucks Back for Landlords, which is through the Bucks County Housing Link. So this is a program to help encourage landlords to lease properties to folks who are receiving vouchers and assistance through the Bucks County Housing Link. So it is a program to help the homeless in Bucks County and try to get that down to zero. So realtors who do a referral can get a $2,000 bonus, which is nothing to sneeze at. Landlords who do referrals also get bonuses, and they get incentives for leasing to the folks through the housing link. So the idea is get a referral first, join first, and then you'll get those bonuses if you lease to those folks. You know, the good news is that it's guaranteed income because the voucher is guaranteed, and they're good folks to work with. So that's my plug for the Bucks County Housing Link, and the Bucks Back for Landlords is, I believe, the official name of the program. So we already talked about my certifications. That's my email and my phone number. Email is always the best way to reach me. I do have a work cell phone number, but that you can text me on, but I don't typically keep it charged that often. Sorry. So So today, what we want to do is talk about our mission first, just so you know a little bit about us if you're not familiar. We'll define what housing counseling is and why your clients should consider it. We'll talk about the Bucks County First Time Homebuyer Program, which is the local program, the state program, which is through Pennsylvania Housing Finance Agency, and the regional program, which is First Front Door. And then there's an ancillary one that is very similar as well. So we were incorporated as Bucks County Housing Group in 1979, and our mission is to assist low and low to moderate income families by providing affordable housing and related social services. So in order to fulfill our mission, we operate shelters for the homeless throughout Bucks County. We also provide case management for clients in both our shelter units as well as in transitional housing programs. So those are there are scattered site units that the county is helping with the housing cost, and we're providing the case management. We own and operate rental properties, 74 of them throughout the county. And I know that a lot of you on the call know this because you guys are huge supporters of Bucks County Housing Group, and we really, really appreciate that assistance. We do have a veterans assistance program, and then we have the 2 community food pantries. And Lisa was just telling me, and I knew that from Maddie, some volunteers from BCAR are going up to our Doylestown location tomorrow to help out a little bit. So that's great. And the other community food pantry is down in Pendel. And then finally, what I do and our other staff here, because now it's not just me, myself, and I, we actually have 3 staff members in our housing counseling department, which is pretty new for us. It has really usually only been me there for a while. During the foreclosure crisis, we had more counselors because they were doing foreclosure. But we provide the counseling for potential renters, home buyers, and in some cases, home owners. So that's us. So what exactly is housing counseling? Because a lot of folks are confused about what we do. So starting with the housing counselor, that's somebody who's a trained professional. And Lisa talked about my certifications, and we have to get those every year. The HUD certification was something new as a result of the Dodd-Frank Wall Street Reform and Consumer Protection Act. We were supposed to all be certified by August 1st of 2020. Because of COVID, they moved it back until August 1st of this year. I was certified in January of 2019 as a HUD certified counseling counselor. So we're supposed to be knowledgeable in the various aspects of renting, the eviction process, home buying, and foreclosure prevention. All of those areas were areas that we were tested in, regardless of what counseling we were providing. And most of you, I have some friends on the call. Hi, everybody that knows me. And for those who don't know me, I want to tell you that a stranger is really just a friend I haven't met yet. I met a lot of people at the Texpo and from working with them throughout the years. But at any rate, most of the folks that know me as the first-time homebuyer counselor, and that's really what my focus is. But housing counseling could include, and does always include, establishing a household budget. It could include credit and debt management, which is helpful if clients come to us before they see the lender. We can help them raise their scores. Determining affordability, looking for an apartment or a home. We don't do that for them, but we assist them by telling them how to search and make recommendations, you know, if they're eligible for Section 8 or things like that, even though Section 8's not available right now. How to choose a realtor and make an offer, choosing a lender and identifying the various loan products that are out there for them, closing the purchase, identifying grants, programs, and assistance for both buyers and homeowners. And then finally, adjusting to life as a new tenant or homeowner. So when and why should your client consider counseling? Well, the very best time to receive counseling is before they sign a lease or a contract to purchase. But no matter where they are in the process, they can always benefit from working with a housing counselor. We will help them understand landlord-tenant rights and responsibilities. So we're going to be offering that to the folks through the Housing Link and our own clients, which we had not done up until now recently. But we're, you know, just review that with clients so they know what their responsibilities are as a tenant, how to prepare for a rental application or a mortgage application, the difference between affordability and sustainability. what it takes to finance a home. So how much money might they need and how can they supplement the money that they do have to make it happen, how the mortgage process works, and if it's really the right time for them to rent or to purchase. For some folks, even though they want to, if they have a 512 credit score, it's probably not the right time for them to purchase, just saying. Also, they should remember, and everybody should remember, that a lot of the lending organizations that are out there that have special loan programs and assistance require that individuals participate in one-on-one housing counseling and get that certificate that outlines the topics covered in order to receive the assistance or purchase the loan. And then we're going to listen to your clients' questions and concerns about buying and hopefully help ease the uncertainties that they may have. So what does it cost? It's free. Yay. There's nothing better than free. And so, oh, look, I spelled our name wrong. Housing Group. You guys, nobody did a spell check. So anyway, currently we even pay for the cost of pulling a tri-merge credit report from the 3 bureaus. And it's a soft inquiry. So those of you, I know I saw Ralph Serino on here and he's a lender. So Ralph, this is a soft pull. It's not going to impact your client's credit score. And in fact, you won't even see that we pulled it. It will only show up on a client's consumer version of their credit score. And we do have a new webinar, What You Need to Know About Credit. In our new process, clients whose credit scores are below a certain level are going to be required to watch that so that they will have the information about credit and how to improve credit scores. It's just easier to do in a group session, which you'll see on the next slide or so. So we also have specific links to the programs through eHome America and Framework. If your clients need Framework and they're going to pay for it, use our link, and then we get a portion of that money back to help sustain our housing counseling program. And that's the only part that there's a fee for, and that's because we're not providing it. These two organizations do. So how do we provide the counseling? It's almost always a combination of group and individual sessions. Usually the group sessions are going to come first so that they can get the basic information. It could be a webinar, it could be in person, although we're not doing them in person just right at the moment. Probably next year we'll start again, just like everybody else. Individualized counseling is offered in person, by telephone, like FaceTime or Duo, or sometimes we do Zoom as well. It depends. We have iPhones for work, so we would do FaceTime if the client also has an iPhone. If they have an Android, then we'd have to go to Zoom because I don't want my counselors using their personal cell phones. So why do they have to do a group session first? Because it allows us to share that non-specific general information more effectively to more people. We can get more clients that way and give more information to them that way. It also ensures that we don't forget to talk about certain things, the basic things. It ensures compliance with our funder requirements. We have to have 3-in-1 authorization forms signed. So we do have a new process now that requires them to sign the form first before they're going to get the link to the webinar. So no more are the webinar links going to be up on our website. Group sessions allow us and clients to learn from one another. David's presentation this morning, I was just reading a book and they talked about one of those metal things that he showed. I thought at first that it was a lawnmower. And it was interesting to me just to learn and see that equipment that I had just read about. So we all learn from the sessions. And then they also prepare attendees for what to expect in an individual session and how to get ready for it. So during the session, for clients who are doing first-time homebuyer counseling, we're going to evaluate their finances, discuss whether they're financially ready to buy now or will need to work on their credit, increasing savings, or reducing debts. So again, we discuss a sustainable housing payment based on their current budget. We can make suggestions on things that they can change to make it more sustainable. Any assistance programs that might be applicable to their situation, what type of mortgage loan might be best. So HUD says we have to give them 3 options. So we do talk about conventional FHA, USDA. If they're not buying in the rural county, then obviously USDA is not going to be the best option for them. And then other things to consider when purchasing a home. So things like increased utility costs, maintenance, how to protect your equity, refinancing, and utilizing home equity. How we recommend folks consider that. And just as an important note here, even if they're not eligible for a program, whether it's the county program or PHFA or First Front Door, they can still request the counseling and get all the benefit of the counseling. They just aren't going to be able to participate in a program. All right, so how do they sign up? Well, they do our BCHG intake application, and the link is, it's at Eventbrite, and the link is on, not yet, because I didn't post it yet, but it will be up on our website. Once they do that, then our intake department or person receives a notice that they've registered, and she'll send the 3-in-1 out via DocuSign. That's the privacy notice authorization and disclosure form that we need to have signed for every client, whether they're a workshop client or an individual client. They'll return it along with a copy of their valid government issued picture ID, like think driver's license, and their monthly housing. And it's not just housing expenses, but it's their monthly expenses. They'll send that back to intake, and then they'll do a quick review with her. She'll schedule the intake to review everything, whatever group sessions they're going to be required to attend. If the lender is referring them for the county program, they'll watch one just about the county program. They might watch the first time homebuyer one if they've not been referred by a lender. And then they'll send in the required personal financial documents that HUD asks us to collect, and PHFA, and we'll schedule the individual session. Those documents are reviewed, we do a complete analysis, and we send it out. If they have provided us with their lender, if there is one, and their realtor who referred them, then once they've been counseled, we will send the email out and copy the realtor on it to let them know that your client's been counseled, they do or do not meet the eligibility requirements for the program, and here's our recommendation. And we'll also send out copies of the county documents and the criteria so that everybody is on the same page and there are no misunderstandings. Okay. All right. Lise, do you have any questions for me?
Yes, we have one from John.
Okay.
Do you work with first-time home buyers who are buying an investment property? If so, how old do they have to be? 18 years old, 21 years old? Question mark, question mark.
Yeah, so no, we don't work with clients that are purchasing investment properties. And in fact, well, we did sort of, kind of, if they were buying a duplex that they were going to live in, because up until this year, clients who were buying duplexes were allowed to participate in the county program. But as of this year, the county said they're not permitted to buy duplexes any longer. So we typically aren't working with investors because that's not my area of expertise. I don't, unfortunately, know how to make money in the real estate market through investment. This is first-time buyers who are going to be living in the properties.
That is it for questions right now.
Excellent. I think that means my slides are comprehensive or everybody's asleep, one or the other. All right. So we're going to talk now about the Bucks County First Time Homebuyer Program, which is the one that most of you are familiar with. The program's been around since 1994. It was as a result of Act 137, which was passed in 93. And then it took them till 94 to get the program up and running. And the county's helped with over 750 clients. And they also support us. It's a competitive grant application that we have to submit every year to receive the money to provide the counseling, just so that you know, it's not an automatic, and we're not part of the county, we're a private nonprofit. Just want to reiterate that. So they must have counseling through us, and we do have the exclusive contract right now. And once again, it consists of both group and individual counseling. And again, it's best to obtain the counseling before they go under contract. If they want to use the program, they need to make sure they're eligible before they sign a contract, or make it a contingency that they have to receive the money. And I know a lot of you don't want to do that because that can scare sellers, particularly if they're not familiar with the program. So they can use the realtor and the lender of their choice. There's no preferred lender list like there is in Montgomery County or other counties, but they do have to have some assets to invest. The program doesn't cover all of the costs. So the county wants them to have some skin in the game, as they say, and they do have to have some reserves, and they do have to be able to cover whatever the program's not going to cover. And then it is a loan. That's important to recognize as well. So even though we call it a grant, and for a long, long time, it was entered into the system by lenders as a grant, it really is not. It's a zero interest deferred payment loan, and the county requires second lien position. So that means that it's not going to be able to be combined with other programs that also require a second lien position, like the PHFA K-FIT, which we'll talk about. There is a maximum CLTV, or combined loan to value. For those of you who don't know the CLTV term, it's 100%. So that means, and we'll see that on a slide, if they're borrowing 97%, the most they can get is 3%. But we're going to use the appraised value if it's higher than the purchase value. That's how we're different than a traditional lender. And I'm going to use the, we, even though I'm not the county, which I just told you. Let me move this bar down. Okay. So, and the final thing to remember is that a household could be eligible, but be entering into a transaction that is not eligible, because we're going to review the household for eligibility, but then we also have to review the transaction once they've entered into it. And so the projected request is based on their client financials. The actual request that we submit to the county is based on each specific transaction. So we had a client that submitted a transaction to us, and they were eligible to receive $9,000, and the deal fell through. And then they wrote up the next deal, assuming they were going to get $9,000, and that wasn't the case, because the whole thing had changed. All the numbers were different, and that's problematic. So you have to remember that when you're, if that happens to your clients. So these are the things that we review for eligibility for the client: the residency, the income, whether they've owned before, where the property is located, because we do have a lot of folks who are looking to purchase in Bucks, and then they jump over to Monco or up to Lehigh or, other places, Philly. What their assets are, we have to make sure they have sufficient assets, as I talked about, the maximum purchase price, and then the characteristics of the first loan. So residency, they have to either live or work here already. If they're doing it based on, do I have another slide? I don't. So if they're living here, then they must have lived here for 6 months prior to application for the funds, not for the counseling, but for the funds. If they're basing their eligibility based on work history, they have to have worked here continuously for at least a year. It can be part-time, but they have to be able to document through tax returns and such that they've worked, and pay stubs, that they've worked here consistently for a year. So we review their tax documents, their pay stubs, their lease, their utility bills. We ask for all of that information. And then, oh, I had it in this slide. So again, 6 months or 1 year. And then again, counseling can be provided in advance of attaining residency or work eligibility. All right. So we look at income, and applicants can't exceed 100% of their area median income, or AMI. We base it on their total household size, not just the person that's applying for the primary loan. It's important to know that income limits change every year. So if your clients don't purchase in a year, then we have to check the next year to ensure that they're still eligible. I have somebody I'm working with that got their counseling back in 2019, and we have to update all the documents and ensure that she is still eligible. And those income limits are published by U.S. Department of Housing and Urban Development. County uses the HUD guidelines for the home program, even though the funding for this comes from local money. That's how they do it. And the income limits are typically published in June. I do want to mention right now that the utilization of the program is down. And so we submitted some information to the county. They've been toying with the idea of changing some of the guidelines. As of right now, these are the guidelines. But if that changes, I'll certainly let Siobhan and Lisa know, and they'll get that information out to you through your weekly newsletter if the guidelines change. So this is the current income as of June 1st, 2021. So for a household of 4, they could earn up to $94,500. And again, it's based on the total household, regardless of who's on the loan. They do have to be considered a first-time buyer. And so the federal definition is someone who hasn't been on the deed of their primary residence for 3 years or longer. So the program doesn't allow any non-occupying co-borrowers. Now, some of the other programs will allow co-borrowers who have owned before, but the county does not, if it's been within 3 years. And also for this program, they can't own any other property. So other programs may allow them to own, let's say, a rental unit in Philadelphia. First Front Door permits that if the borrower never lived there. The county does not allow that. They can't own any other real estate. And so, of course, mobile homes with a land lease are okay because that's a vehicle loan. I mean, they don't own the land, and timeshares, of course, are not a problem either. And of course, we strongly recommend against entering into a timeshare. Regardless of the first-time buyer status, they can only use the program once. So if they used it 10 years ago, got divorced, sold the home as a result, and now they're first-time homebuyers again, they're going to have to find a different program to use. They won't be able to use the county program. The house has to be located in Bucks. So this is the school districts, 15 of them, I guess. You know, if they're looking over here in Central Bucks and they go over to Hatboro or Horsham, or up here, they go to Coopersburg. I think part of Coopersburg is actually in Bucks and part of it is in Lehigh. But if they're outside of Bucks, even if they're living or working here, and I had a couple clients that said, but I'm eligible. Yes, you are, but only for a home located within the county limits. So their assets. They do have to have money to invest. So the county is going to require a minimum of 3% of the purchase price be invested. And then we are also going to need their bank statements to demonstrate that they have at least 1 month, but not more than 6 months of the proposed PITI left in reserves after closing. And whatever's not covered by Seller's Assist, this program, any other programs that they're leveraging, they have to have the money to cover it. The county doesn't cover everything. It used to, so for some of you who have been around since 99, 94, like me, we used to just, if they needed the money, they'd get the 10 and it could go to whatever. It doesn't work like that anymore because of that CLTV. Maximum purchase price currently is $304 on existing and $331 on new properties. Again, this is one of the things that we've asked them to consider changing, because if we're going by the income limits, a household of 4 could probably afford a property, depending on their debt situation, that's more than $304,000. And we know that the area median that just came out in the September statistics was, it went down a little bit, but it's still way above 304. I think it was 370 something. So at any rate, we're asking the county to consider raising those, even if it's just temporarily because of the market. So they can use the lender of their choice. There's no preferred lender list like in Montgomery County, but the loan does have to be a fixed rate with a term of 15 years or longer. And of course, most folks are using the 30-year. I know one of the local banks had a 25-year first-time homebuyer loan. Some of them had adjustables, 7/1 adjustables for their first-time homebuyers. They can't purchase that type of loan. It has to be a fixed rate. And so borrowers can use conventional FHA. Because of the zero down payment requirement on USDA and VA, those loans don't work as well with the county's CLTV limit. They would permit it to go to 103 on the VA loan, but then the VA doesn't allow them to do that. So then they would make them put it for down payment, and that kind of doesn't help them really, especially in this interest rate environment. It's not going to make too much of a difference, and it just adds a layer that doesn't need to be there. The good news is that borrowers using those loans really probably have less need for the program. So again, it is a loan, and it is never, ever, ever forgiven. I get this question a lot. Well, if they live there for 5 years, does it go away? If they live there for 10 years? No, it never goes away. It's always going to have to be repaid. So again, I talked about this already. If they're referred by a lender or realtor, then we send the email with the guidelines and samples so that everybody knows it's a soft second. Some lenders who were allowing this program pre-COVID, during COVID, were not permitting it. So I know that we did just get reapproved by a couple lenders who every year annually reapprove us. So that's good news. Because the second lien position is required, it cannot work with piggyback mortgages, you know, those 8515s or 8555s, whatever they have. And it can't work with the PHFA, KFIT, or KAAL because they also require second lien. It can be used with a PHFA primary loan if the borrower is not using the PHFA assistance. They don't have to. That's another question I get. So do they have to buy PHFA? No, we're not a, you know, but they can. So it's zero interest. It's no monthly payment. It's always, 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 always going to need to be repaid, and it has to have second lien position. They repay if they sell, if they try to access their equity, either by doing cash out or refinance or a home equity loan or a home equity line of credit. Now, if they transfer ownership without benefit of sale, you know, let's say for $1 to a son or a daughter, the county would probably, they say that it needs to be repaid. I would say that if it would create a hardship and if the beneficiary, for want of a better word, meets the guidelines, they might not require it be repaid, but you might as well assume that it would need to be. And if they're no longer living in the home as their primary residence, because this is a program for owner occupiers. If they're refinancing simply for better rate or terms, then the county will consider a subordination, but they will need documentation and they'll analyze the new loan. How much? That's always the big question. It's never ever going to be more than 10K because that's the program limit. Last year, the assistance loans ranged between 2,500 and 10,000. Again, because a lot of times it depends on the purchase price, the loan type, and all that. So during counseling, we're going to come up with a projected request based on their financials and the subsequent maximum PITI. I don't care as much about the purchase price, although it can't go over the limit. What we're going to figure out is what's the county's maximum PITI going to be. And then, and we'll tell them this is the highest payment you can have using our assumptions. This is what we're coming up with as a purchase price. When you find your transaction, as long as the PITI doesn't exceed this PITI, then we'll do the request based on the specific transaction documents. So, you know, we use assumptions just like the lenders do when they, and just like you do when you do the buyer's estimate of closing costs. We don't know 100% what their interest rate is going to be, what the taxes will be, what the homeowners will be. And since those things can change, we just want them to focus on the maximum PITI and then know that they can't purchase over 304. And that's kind of it. So although it's not a strict down payment match, for conventional loans, typically it's going to mirror the down payment. And for FHA loans, it's going to be a little less because of the financed mortgage insurance. I know FHA doesn't consider that in their loan to value, but the county does. So when you put down 3.5%, and then you finance 1.75 for the upfront mortgage insurance premium, it raises the loan amount to 98.19. So they're going to get 1.81, or I don't know if those, maybe it's 98. Yeah, it's 98.19. So they're going to get 1.81 from the county in most cases. But again, we use the higher of the purchase price or the appraised value, even though the lender typically goes with the lower. Excuse me a minute. Okay. So here's an example we'll use a purchase price of 200,000 and assume that the borrower has sufficient but not excess assets. So on a 97% loan to value where they're putting down 3, that would be $6,000. So if everything is equal, they could pretty much assume that they could receive 6,000. If they're putting down 5%, that's 10,000. Again, they could pretty much, if the house appraises just for the 2, then they could pretty much assume they would get the 10. If we're using appraisal and the appraisal is higher, in the first instance, we could ask for more then, because the combined loan to value is based on whichever one is higher for us. But on the 95, 10 is it, regardless of the appraisal, because that's the program maximum. And then on FHA, with that UFMIP rolled in, 3,600 is what they could expect on that $200,000 purchase. And that's why we're seeing that wide range of assistance amounts, 2,500 to 10,000, because it really depends on each individual transaction. All right, any questions about the county program?
There was one, but you actually answered his question, so no other questions.
Can I ask a question, please?
Absolutely. Hey, Karina.
Hello. Hi, how are you?
I'm well, thank you. Yourself?
Thank you. I'm
Good.
good. So the question would be, is there any limit for the down payment? Like, for example, let's say someone has more than 5% down payment to put, are they eligible for the program?
Yes, that's a good question. So if they have excess assets, but they're using them in the transaction to make it more affordable, or, then that's absolutely fine. We don't require maximum financing the way Pennsylvania Housing Finance Agency does. Good question.
I actually
Hi,
have a
Flex.
question.
Sure.
Hi.
Hi.
So all this that you went over, I've been multitasking for doing this, but are we gonna get any slides like by email, all that
Absolutely.
information you just went over?
Yes, Javon's going to send it out, and
Awesome.
she's going to
Yeah, because
send
that
a
was a lot of good
one-page.
info.
Yeah, she's going to send a recording. She's going to send the slides, and she's going to send a one-page PDF, or maybe 3-page PDF, I don't know, of the county guidelines specifically.
I also have another question.
Okay.
Certainly.
So my second question was, you said that the person has to be living in Bucks County, or they actually can live in a different county and they wanted to move to Bucks County. Are they eligible for this?
If they're working here, yes. If they're not, no.
What if their work might have a different locations? Like, do the actual physical office for their employer has to be located in Bucks County?
Yes. So so somebody might be working for a large corporation that has a physical location here, but their headquarters is in California or something. That's okay, as long as they're working here. But somebody who's working for, let's say, a healthcare place in Philadelphia, and they travel to different places because they're a contract health worker, that probably wouldn't fly.
I see. Thank you so much.
Mm-hmm. We can always ask, but it doesn't mean that they'll agree.
Okay, so in that case, who do I have to ask, or who do I have to
You
say?
would let us know, and I would make the case to the county. But I will say that if it's a business that's located in Philadelphia and they're only occasionally traveling here, the answer is going to be no. If the business was located in Philadelphia and like Wawa or something like that, right? So I've had people that transferred from 7-Eleven or a Wawa in Philly, and they transferred here. In that case, they would probably need to work at that location here for a year. But they can come for the counseling in advance.
All right, thank you so much.
Mm-hmm. Anybody else?
Actually, yes. Yeah, I do have one more actually.
Sure.
So like a lot of people that I deal with have really like bad credit. Is this one of those programs where, let's say, if I know they have like on the fence credit, they could come through and get counseled anyway? So even if they can't buy a house, maybe you can get them right in like a year or 18 months?
Absolutely.
It's very interesting. It's good to know. That's why the reason I asked about those forms is because I actually do a financial literacy class once a month in my neighborhood, and
Oh, good.
this is more information I can pass out to some of those people who aren't as far as they think they are now.
Right,
So,
right. So, so we'll pull credit, Fletcher, as part of the counseling. We'll also go over their budget with them, and then we'll talk with them about the 3 options that they could be looking for. They might be looking to improve credit. They might be looking to reduce debt. They might be looking to improve savings. So they all have different strategies. And what we would do is to identify which is the most important thing for them to work on and help them work on that first. So if improving credit is their goal, but reducing debt is going to help them do that, then we'll help them work on a debt reduction plan. We don't do debt payment plans like some of the other agencies do. We'll help the client work on it themselves.
okay. All right.
All right, and you can reach out to me via email, space@bchg.org. And if you wanted us to come and talk, at one of yours, or, vice versa, we can probably, this year, I think we're going to start adding community partners. In the past, I'll be honest, I didn't, because when it was just me, it was too hard to manage different volunteers. And then if they caved on me because they had a family emergency, then, I'd have to scramble to try to get somebody else and end up doing it myself anyway. So up until now, often we didn't have anybody else participate, but in the next year, in 2022, especially if we do the virtual, then we'll be looking for partners as well.
Thank you so much.
You're welcome. Anybody else? All right, here we go. So let's talk about PHFA, or Pennsylvania Housing Finance Agency. So the mission of their agency is to provide affordable homeownership and rental opportunities for older adults, low and moderate income families, and households. Let's just not say families, households, and people with special housing needs. They manage mortgage programs and investments in multifamily housing developments. And we actually, one of ours, Robert Morris down in Morrisville, is a PHFA multifamily housing development. And they also provide funding for community development projects. They promote economic development across the state, utilizing these different tools. And they are a state affiliated agency, but their programs and operations are funded by the income that they generate through their investment activity and through program fees and financing programs. So they are mission driven, and they provide affordable housing products and programs to the citizens of the Commonwealth. They offer programs and administer funds also on behalf of state and federal government and tax related programs. And for that, they receive fees. And that, those are the ways that they help fund their programs. So one of them is the HEMAP, Homeowners Emergency Mortgage Assistance Program. So that is a loan to help people who are facing foreclosure bring themselves current. Sometimes they can also get continuing assistance. That's a whole different webinar, but they have interest that's paid on that loan. And that's one of the ways that they help pay for their programs, as well as the primary mortgage loans for your first-time home buyers. And so these are the benefits of those primary loans. They're competitive interest rates most of the time, not always, as some of the lenders on the call know, but most of the time. There are fewer fees because the lenders are limited in what they can charge. They're 30-year fixed rate, all of them, doesn't matter. And they can be used with FHA, VA, RD, or conventional. They could, borrowers using one of their loans could qualify for the MCC, the Mortgage Tax Credit Certificate. they can also possibly receive down payment and closing costs, and they don't have to be first-time home buyers to access those assistance programs. It depends on the assistance program. The mortgage is always serviced by PHFA in Harrisburg for the life of the loan, and they do have some special programs, some assistance programs for persons with disabilities. They also offer EAH or employer assisted housing programs, depending on whether the employer participates. A lot of them are in Philly, not so much here. And homeownership counseling is available for free through their network of counseling agencies, of which we are one. And it is required, counseling is required for all borrowers with a FICO score below 680. That's in-person counseling. And if everybody's score is above 680, then at least one borrower on the loan has to have it, unless they're doing a refi, and then they don't have to have the counseling. So their primary loan programs, I'm going to start with that before we get to the assistance. Just so that you're familiar, the Keystone Home Loan is their KHL program. It has income and purchase price limits, and it does have a first-time homebuyer requirement that is specific to each county. There are some exceptions for veterans, or if they're purchasing in a targeted county or a targeted area. And again, they can use FHA, VA, RD, or conventional. The HFA, or Housing Finance Agency, preferred risk sharing is in conjunction with Fannie Mae. So there's the risk sharing, which is no MI, and the preferred, which is low MI. So the loans have PHFA income limits that are set by PHFA rather than Fannie, but they don't have a first-time homebuyer requirement, and they don't have purchase price limits from PHFA. They do have Fannie purchase price limits. The KGov loan does not have PHFA income or purchase price limits, only those limits set by the government, and it does not have a first-time homebuyer requirement. So your borrowers could utilize the PHFA KGov and access assistance on a second purchase if it's their second time around. They don't have to be a first-time homebuyer. And so to see more about their programs, they have a programs at a glance form, and you can find it at that link. And of course, you'll get the slides, so you'll have the link. So those are the primary loan programs that are used in conjunction with the various assistance. So these are the various grants and assistance loans. It's important to remember that not all grants and assistance can be used with every primary loan. In order to access any of it, they have to go through a PHFA lender. And there is a list of the PHFA lenders by county, by top producer, by a bunch of different things on their website. So they have a PHFA grant. They have the KAL, which is the Keystone Advantage Assistance Loan. They have the KFIT, which is forgivable in 10 years. That's where they got the KFIT acronym from. The MCC that I mentioned before, and we'll talk about the benefits of all of these. And they do have an access down payment and closing cost program, as well as a home modification program for folks with disabilities. So no specific loans, primary loans, but they have the assistance programs. They also have homestead down payment and closing cost, and that's through the home program. So again, using those same home limits that the county uses, and then the EHA that I mentioned. So the PHFA grant is $500. It helps with down payment and closing costs if they're using that HFA preferred, which is the low MI program. It doesn't require repayment. It's simply a grant, and it's just used for the purchase of the loan. So it just goes on the HUD, HUD 1, listen to me calling it a HUD 1, the closing disclosure. The PHFA grant can be used in conjunction with the Keystone, only with, I should have taken that line out, only with the HFA preferred program, but they can also combine it with the KAL. All right. So the KAL, 2 A's, is the assistance loan program. So it's a second mortgage. It helps with the cost of the purchase, down payment or closing costs. It's 4% of the purchase price or $6,000, whichever is less. So the assistance loan is amortized over 10 years at 0% interest. We got some information from them that said at the same interest rate as the primary loan, and that is not the case. It is a 0 interest loan, but they have to start paying it back at the same time as they start paying back their primary loan. So their debt ratios have to be able to support both payments. And they can do it, well, that's all you need to know. The assistance can be used with the HFA preferred, with the Keystone government loan, and in that instance, they don't have to be a first-time buyer, or with the KHL, the Keystone Home Loan. The KFIT can only be used with the Keystone Home Loan, but it can be used on all 4 different types, conventional, FHA, VA, or RD. The applicable government underwriting requirements are going to apply, including loan to value and down payment requirements. And then they also have to meet the requirements of the PHFA's first mortgage program. So they may be different. The KHL underwriting guidelines may be more restrictive than the government underwriting requirements. So it has to meet both. And then also has to meet the Keystone Forgivable in 10 Years program. And I listed those on the next slide because there were so many. So they have to have a minimum credit score of 660 or they're not going to be able to access it. The max, and that's every borrower on the loan. The maximum amount will be based on 5% of the purchase price or appraised value, whichever is lower. And there's no maximum dollar amount. So they're only limited by the maximum purchase price. The assistance can be used for the minimum required down payment. So again, they have to be using maximum financing and or closing costs, and the minimum loan is 500. It cannot be combined with any other assistance programs except for the access modification program. And the asset limitation. So they have an asset limitation on this program and it cannot be greater than 50,000. And I just wanted to mention the county's asset limitation is 6 months PITI. And that was another thing that we're talking with them about increasing. I'd like to see them match this 50,000 because we encourage people to save 6 months worth of expenses to prevent against any unforeseen circumstances. And now you're telling them they can only have 6 months of mortgage payments. And I think that you know, it adversely impacts people who have done a really good job of saving. So we're asking for that to be changed. But on this program, it's 50,000. And it includes cash and funds and checking savings, stocks and bonds, CDs, and other liquid accounts. Their retirement accounts will only be considered if it can be withdrawn without penalty because they meet the age requirement and or are retired. So the MCC can be used with the HFA and the KGov only. It's not permitted with Keystone Home Loans. And they have to meet the requirements of the first mortgage program and also meet the MCC requirements. So they do have to be first-time buyers unless they're a veteran or purchasing in that targeted county or area. And some non-targeted counties do have targeted neighborhoods. So you have to look on the website to see. Bucks County is not one of those counties, by the way. Income, the gross annual income for all adults that are going to live within live in the house within 1 year of closing can't exceed the KHL income limits. And all sources of income have to be included except for the income received by persons under age 18 or income received by dependents enrolled in full-time undergraduate programs. And that's the same guidelines as the county. And then the purchase price can't exceed the KHL purchase price limit. I didn't put those here because it changes and, you know, we can always look it up if they're eligible. Then we have the MCC second slide. So this is just how they calculate it. So it's a dollar for dollar tax credit for your borrower. And it goes from 20 to 50% of the interest paid on the mortgage loan annually. The amount that they're going to be allowed to write off is based on the original loan amount. So if they're less than 100,000, they take their interest times 50%. Excuse me. And then if it's less than 2,000, they get the whole thing. If it's more than 2,000, they're limited to a $2,000 write-off. Whatever part of their interest they're not using for the MCC, they can claim on Schedule A of their regular tax return. So as you can see, as they go up in purchase price, the amount the credit rate decreases to 20% at the end. And if it's there for the life of the loan, but of course the amount that they'll get every year will decrease as the amount of principal increases and the amount of interest decreases through amortization. So here is an example for you just of how much they would be able to access. So if they bought it 110, they can take 40%. So it's 1760, and they can claim the full 1760 because it doesn't exceed 2,000. And then the remainder of their interest, they can just take as an interest deduction. None of us are tax people, so, well, maybe some of you are, I'm not. Although I did volunteer and do it one year. That was fun. So here we have the programs for people with disabilities. So it can be the borrower or somebody in their household, but they have to meet the guidelines, and they can be eligible for up to 15,000 in down payment. So again, it's a 0 interest down payment and closing cost loan, and then 10,000 for access modifications. So it's 2 different loans, and they're both 0 interest. So they can't exceed 80% of the AMI statewide family median income. And so again, that's the HUD numbers. It's 0 interest, it's no monthly payment, and they pay it back when they sell, transfer, don't live there any longer. And it cannot be combined with any other down payment or closing cost programs aside from the modification program. So here's the modification. It's 10,000, well, 1,000 to 10,000. And this can be combined with a Keystone Home Loan or a Keystone Government Loan. And if they're not using this one, right, because this one is limited to certain guidelines. So if they don't use that, if they just use this, then some of those other income guidelines don't apply. And there are common modifications that they typically use it for: ramps, doorways, widening doors and hallways, grab bars, modifications, things like that. So the homestead program, some of you are familiar with from a long time ago. Bristol Township was the only eligible area in Bucks. It's only, it's not available with the KGov or the HFA loans. So it has to be used with it's essentially the KHL loan. They can get 10,000 in down payment and closing cost, and it's forgiven over 5 years. The problem, I don't know, well, it is a problem actually because of the age of the housing stock in Bristol Township. The guidelines say that the house has to be built after 1978. That's not necessarily true, but it cannot have any crazed, chipped, peeling, scratched, or otherwise damaged paint because of the lead-based paint issues. So if it was totally rehabbed by a community development corporation, it could meet the requirements. And if it passed the appraisal with no damages, no repairs required, then it could be used with the homestead. But if it doesn't, if the appraisal notes any of those areas, then you can't come in and fix it. It's just done. You're not eligible. So because it comes through the home program, it's only available on a first come, first served basis. And I haven't really heard of anybody using it recently, or in some time actually. So the EHA program, if they work for a participating employer, this is the Keystone Advantage Assistance Loan. So remember that was 4% of the purchase up to $6,000, but if they do it through the EHA program, then it's up to $8,000 for down payment and closing cost assistance. And again, it's an interest-free loan amortized over 10 years. So the employees have to meet the requirements for the program. And then I gave you the link to the participating employers. So, this is a lot of information. And what I want to tell you is This is the role of the housing counselor, right? We determine whether the clients are eligible for these various programs during counseling and let them know. Now, if they were referred by a lender that's not a PHFA lender, unless they specifically ask us about it, we're not going to go over this because we've got to refer them back to the lender that referred them. But if they're not referred by a lender, then certainly we would review eligibility for all programs. And we don't expect you to know this stuff inside and out. It's not your job as a realtor, but I did want to give you all the information. And that's why I gave you the primary loans first, so that when you saw in the guidelines, it's only eligible with this one or that one, you would know what I was talking about. So Lisa, questions?
There are no other ones in the chat. Does anybody have any questions they'd want to ask Sherry?
Yes, just what just recently Sherry said. So that means when they apply and going through the eligibility process, they automatically being screened for every program. Is that correct? Is that
Yeah,
I
we're
correctly
looking at
understood?
yeah, we're looking at their income. We're looking at and we talk about the programs with them. Yes. Because
And
we have to
Thank-
collect all that information. So, and so let me just say that if, you know, we work for the county, we work for PHFA as housing counselors. If the PHFA K-FIT program looks like a better fit for the client, because we also look at credit scores, because remember, for any of these, they need to have 660, well, not any of these. For a lot of these, they have to have a 660 credit score. So we're going to look at that first. If they're eligible for PHFA, that would be the K-FIT is our current favorite program. Why not? It's forgiven, right? Why would we suggest that they do a zero interest deferred payment loan if they could get something that's forgiven?
we do have a couple more questions that popped in from John. How long is the housing counseling in effect before buying a house? I think that's your question, John.
Yeah,
Please,
Lisa. Yeah, my question is if they go through the counseling and that's completed, is there like a certain amount of time they have to buy the house after that? Or is, okay, they've done that, and then if they come back and want to buy a house a year later, 2 years later, they already did the counseling?
Yeah, that's a great question, John. Thank you. So the counseling certificates are generally, for lenders, are generally good for a year. For First Front Door, they want them to have them within 6 months. From our perspective, for the county program, we need updated documentation within 90 days of their application, so 3 months. So if they've had the counseling and they've done the webinars, like my girl from 2019, we would ask her for all those documents again, updated documents. We would redo the analysis, and we would do an abbreviated counseling with her and update her certificate.
Okay, so you would recommend, like, if somebody is a first-time home buyer and they're going to use one of these programs, to go ahead and get the counseling, and then if it needs to be updated down the road, so be it. But it's always
Yes.
good to get the counseling out of the way up front.
Absolutely. Yes.
Okay, great. Thank you.
Yeah. And some of
Another-
the, go ahead.
No, go ahead. I'll ask.
I was going to say,
after.
some of the programs require not just our certificate. So PHFA wants their own certificate. First Front Door has a First Front Door counseling certification. We have to tell them what topics we covered in addition to our certificate. And if they're buying a Fannie Mae Home Ready, then they need the Fannie Mae Form 1017. So those documents we would issue, you know, when they need them.
Sherry, one final question on that. How old do they have to be to go through the counseling? Do they have to be at least 18 years old, 21?
So in order to benefit from the county program, they've got to be 18. I would say they don't have to be 18 to have the counseling, but I'm not sure why somebody younger than 18 would do it.
Yeah, the reason I asked the question is I'm working with one of the local high schools to educate, the students, and they're starting to think about buying houses, after they graduate. So I was going to mention, hey, this may be, you want to get in contact with you guys, go through this as a means to get prepared for whenever down the road.
Okay, John. So do me a favor then. Email me afterwards, space@bchg.org, SPACE, because it's S for Sherry, Pace is my last name. And some of my friends on the call will say that it's probably applicable at some points. But at any rate, email me afterwards and we will talk about that, because we can do specific programs. We have financial capabilities that we can do. And we have the credit webinar, we have a first-time homebuyer webinar. So they could do all those things to get the general basic information. And then if they want us to pull credit and talk with them about how to establish credit, if they haven't done so, we can work with you on that. We'd love
Okay.
to.
Awesome. Thank you.
Mhm.
Okay, we have a couple more questions, Sherry. If the client is diligent with the counseling, how long typically is the counseling process?
So when they used to come in person with me, counseling was 4 hours because we did all of that analysis, gathering of the documents, all that stuff during the session. So now it's a different process. So they'll do the 3-in-1 first now. They'll send us their ID. They'll send us their monthly expenses list. They'll do a webinar. And we'll have all their demographic information. Intake will speak with them maybe 45 minutes or an hour to verify the information and talk with them about the documents to be collected. Then it's up to them how long it takes them to get the documents into us. Once the documents are here, they will be analyzed. I'm going to say at this point, we're probably at a week to 10 days out on analysis, and then it's up to the client to schedule the counseling. We were far behind because of COVID and because I was out for 4 months at the beginning of last year, but we're caught up now, so very caught up, and we have been for a while. So it depends on the client getting their documents in, because we can't do an actual analysis unless we have the requisite documents. But the counseling session itself to review the analysis is going to probably take an hour and a half at this point now.
And the last question, would a gift from relatives affect the buyer income thresholds?
It doesn't affect the income thresholds, and they can receive gifts, and then we'll count that as their funds. We will also count first front door assistance as their funds since it's forgiven. And we will not count, what else won't we count? I think that's it. So, yeah. But remember, we do count total household income. But a gift is an income, at least from my perspective.
Okay, and that appears to be the end of the questions.
Okay.
Thank you so much, Sherry. This has been a wonderful program, You've given us great information. And as we've mentioned, Siobhan will be sending the recording out along with the PowerPoint and another document that Sherry has kindly given us to provide to you. Look for that either later today, but most likely tomorrow. It'll come in an email to all members. And thanks again, Sherry. We really
My pleasure.
appreciate all of the hard work you do on behalf of Bucks County people. So,
Thank you.
all right.